I believe we are in a rude awakening regarding the gold to silver ratio. In this video, we're going to discuss why our expectations very well may not be met as we discuss what gold is doing compared to silver. Let's talk about it as we explore. The three things we think about the most in this community are silver, gold, and cash. That's right. They all are very important for sure. We need cash, we need money, we need fiat currencies in order to purchase our gold and silver. But then we talk about how we should not think about gold and silver in terms of dollars. We hold it in our portfolios and our stacks essentially to protect against a deflating value of our currencies. And that essentially means that the governments and central banks around the world are inflating the dollar by printing more of them. But nonetheless, when we think about gold and silver, we always measure them against each other. The only way really to do that is the gold to silver ratio. In this video, we're going to take a look at the historic ratio since 1869. I've done a video like this in the past, but the chart has been updated yet again. Remember, the community made me aware of this and also saw this in my research as well. And this gives us a little bit of insight and idea as to what's going on with the gold to silver ratio and why we should mute our expectations that it's going to get anywhere near what we perceive to be the normal. And just what is normal? Yes, indeed. How do we gauge what normal is these days? We don't live in a normal society anymore. A lot has changed since 1869, that's for sure. And we really can't even make an average based off of what's happened since 1869 as to where the gold to silver ratio should be. We must shift our expectations. We'll try to make sense of where those expectations are going to be after looking at this chart here. But it is interesting to see what the gold to silver ratio is. Now, before we get into this, I first must define what exactly is the gold to silver ratio. Essentially, it's how many ounces of silver can be bought or to trade for 1 ounce of gold, measured in US dollars. You can also apply that to your own currencies as well. How many ounces of silver equal 1 ounce of gold in terms of the price measured in the markets, the spot price of gold and silver. Now, as I record this video today, silver is actually down and gold is up. There are times when it's the opposite, but we've seen more and more of that happen more frequently and at least not moving at the same pace. And therefore, gold is outperforming silver in the long term, hence why the ratio is so wide today. But let's go back in time, shall we? Back in 1869, it was 14.8 to 1. And that's at a time where essentially it was fixed. And I guess there's some fluctuations, but remember, up until 1964, silver was used in our currency. And in fact, gold was as well until 1933. And we can see what's happened. The oldest continuing exchange rate dating back to 3200 BC is what this says here, and that's about 15 to 1. But the mining ratio is about between 7 and 9 to 1. That's the amount of silver and gold that has been mined against each other out of the ground. Many people feel that that means that the gold to silver ratio should be equal to the mining ratio. But in reality, you cannot make that connection. You can't conflate the two because they're wholly and completely different. It really boils down to rarity. And rarity is a very deceptive practice because, let me tell you something, there's something that I have that's extremely rare, but I guarantee you that most of you would not buy it. Not even for $1, depending on what it is that's very rare that I have. When I get 100,000 subscribers, you'll learn a little bit more about that. But nonetheless, this is the case. We're looking through here, and you can see the fluctuation where the gold to silver ratio through the latter part of the 19th century and really into most of the time until we were taken off the gold standard, a very fluctuating gold to silver ratio. Maybe that's how it was measured in dollars around the world at the time, but really these lines should be very, very blocky here, but they're not for one reason or another. And So that is, and it is the oldest continuously tracked exchange rate. And why is that since 3200 BC? Well, because gold and silver acted as money together collectively, and they were always measured against each other. Silver, though, was the obvious, more continuously flowing monetary metal in world history for the entire existence of civilization. And I think, really, in a sense, even with silver and gold being moved into the economy and being used as currency as well as money, does not mean that there's not inflation. And I think this is what's reflected with inflation. Because when you think about it, any kind of money that's injected to the monetary supply, whether it's backed by gold or not, can be inflated. And by the way, gold and silver themselves as well can cause an inflation of a different sort, which is what we're going to look at as we look through here. Looking back into 1939, the gold to silver ratio peaked in 1939 after President Roosevelt set gold at $35 per ounce in 1934. And that's right. It was at $20.67 an ounce up until that point in time when the confiscation occurred. But then he set it at $35 per ounce, and that peaked that ratio. Then the Bretton Woods Agreement happened in 1944, and then 1945. It pegged foreign exchange rates to gold, leading to a steady decline in the ratio. In other words, there was no direct connection with dollars to gold, but any other nations around the world could indeed take their dollars and exchange them for gold around the world. And France tried to do that in the 50s, but that's another story. But you can see here, and that was around 60, high 60s, early 70 here, 70 to 1 at this point in time when it was going down. Then you saw it go right back down in 1971 when President Nixon officially closed the gold window and in the gold standard, stopping Bretton Woods, detaching the U.S. dollar from gold completely. It was supposed to be a temporary measure, but we see what happened there. And then that gold and silver ratio followed. That stopped, essentially, any connection, which means that anything else after that was market-driven. Yes, indeed, market-driven at that point in time. And then it started to fluctuate, go up. And then in 1980 is when we saw the original silver squeeze by the Hunt brothers. Of course, other factors participated as well. And that brought down the golden ratio to, man, right around a little below 14 to 1, apparently, at that time. And then we saw, that's the last time that occurred, by the way. And then it kept going up, sawtoothing its way up. And then we saw here at this point in time, which it appears to be around the late 90s, where it did spike up fairly dramatically when silver prices were down very, very low. The gold prices started to creep up again, into the high 80s and 90s. Well, actually, this definitely would be into the 90s at this point. And then you see here this point in time where sawtooth and fluctuated in price. And then in 2011, we saw silver price increase dramatically. And this is where it got to about 33 to 1. 33 to 1 or 32 to 1, and it's a peak to the downside for the gold to silver ratio. That was interesting to see. A lot of people really use this measure as to where the gold to silver ratio should be. But then ever since then, it's just really been all up, except for about this point in time, or I think this was about 2016, when silver's price got up to about $32 an ounce, $30 an ounce, or what have you. And gold was still down, and that narrowed it a little bit more. But for the most part, actually, you know what? That came after. That came about 2021 or what have you. But it did peak here at 125.1 during the COVID-19 pandemic. And I think there was a time where we saw 126 to 1 as investors sought gold as a safe haven. And that's where they kind of flocked to. They flocked to gold, essentially, more so than silver, because gold is treasured by central banks and around the world. But silver, went up later in the year as well, too, but not nearly as much as gold did. And really, that's kind of been the story. And ever since then, we have not seen the gold to silver ratio since then go below 75. In fact, right now, it's about 84.3 according to this graph here. And likely it's a little higher than that today, but likely it's above 85 again. But that's where we're at. But gold and silver measured in dollars compared to each other. And that's really where it ends. Now, I think our expectations, I don't think we're going to see it go below, I don't think we're going to see it go below 60 again. I don't think it's going to do that again. I would be shocked and surprised unless there's a literal market shock where that could occur very temporarily, much as was the case, according to this graph, in most of these other situations. These are very, very temporary peaks and crevices. Very, very temporary for a short amount of time. But for the most part, I think we're done with 60 to 1. In fact, I dare say that if we were to see 75 to 1, that very well could be the new average. Looking at this graph and the patterns, we've gotten through these dips, 3 major dips here in the gold to silver ratio. Ever since then, it's been pretty much staying far above 75. So I think 75 very well should be the new average of where the gold to silver ratio is going to be. These two metals perfectly complement each other, but more and more they are diverting from each other in terms of their purposes. Gold being the metal that's treasured by central banks and folks around the world. Cultures recognize its beauty and elegance for jewelry and other uses that are treasured. Silver is much more a commercial and industrial metal, a commodity, if you will. It's especially considering that its uses only are expanding. And both metals have been mined at a tremendously greater pace since 1900, causing precious metal inflation, really throwing out all of the conventional wisdom and knowledge on gold and silver as technology has borne itself to be able to extract more of these metals from the earth. Both of them still rare, but in comparison to each other, that mining ratio varies, again, from about 7 to 9 to 1, maybe even greater. But that has nothing to do with price and use cases and demand for the metals. That's a different story. So far, the demand for silver by central banks and other entities is far outstripping gold in that regard. And these are just the things, the hard, true facts that we must face into the understanding of what we're doing with gold and silver. So I hope you found this video informative, insightful, and educational with regards to gold to silver ratio. Do not expect much change there, and it should not change your calculus, but being more realistic about both gold and silver will only benefit us in the long run to keep our expectations of gold and silver as wealth preservation devices. Let me know what your thoughts are in the comment section below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.